Hi everyone, today is July 8th. We'll start with Bitcoin as usual with 4 hours. Okay, so let's see how it looks like. First of all, uh, what we see here is very bullish, very positive consolidation. This is a typical rectangular pattern where you would see a couple of touch points on the upper side. You see, this was also a perfect touch. Look at that. Beautiful. Now, of course, everybody was so excited here, and then it lost. But when it lost this attempt, or we can say when this attempt was rejected, we have to see how deep it goes, and it was well within the limit. So this is a rectangular pattern. We can simply extend this line like this, and you can see that, right? This is a support line and this is a resistance line. So this is how it is. So what we are seeing is the swing within this narrow rectangle or block, or we can say channel, horizontal channel. This is how it is. Now, this is very simple to understand. We cannot do much about this. It's all about patience, and it's all about tracking the bounds, the upper bound and the lower bound. So when is very difficult to answer, but I would say if it goes nearby this one, then the probability of this to break out next time is extremely high. What we don't want is to come close to this 29,500 level, because then it will put pressure, and if that happens, then this drop could reverse the whole entire move. So if we have to track, we can track 29,500, because that becomes support from this pattern point of view. I could add one level, actually. No harm in doing it and stuff. Just horizontal line. I could add a price line 29,000. Let's say 500. And as usual, like this. So this becomes the support line and the immediate support line, I would say. Okay, from this structure point of view. So if this is broken, then it will go down further. We'll see if it happens. So it's not showing any sign of that to happen. If it comes, then I'll update you anyways, right? And tell you how bad it is. Looking at the situation at this moment, it is consolidating very positively. So of course the direction is up. Okay, the direction is up like this. We can say that. Let's look at a little higher time frame, like 1 day, how it looks like. So right now the direction is up, but remember, scenario point of view, we have to keep this in mind. I'll keep this dotted line indicating probability of this is low, making red dotted line. Solid means probability is high, right? Indicative. So this is the direction we are looking for. And so far, so good. I always say risk management has to be in place no matter how good the situation is. It doesn't matter. It's always required. Like when you're riding bike, no matter how good you are, we always wear helmet, or while driving car, nothing happens most of the times, but we wear seat belts. So it's like that. So that is nothing but risk management. You're not going to wear seat belt drive when accident happens. So that's why better to keep that. those measures in place. That's what we do. When we talk about risk, it's not about probability of risk is high or something like that. It's about preparedness, and that is so important. So some people, think about a risk when price starts falling, and that's not the right time because the brain or the mind doesn't work well in a pressure situation. This is the time where there is no major downturn or there is no major uptrend, though. So market is kind of stable from BTC point of view, right? And so the mind is also stable that way. Impatient, but not like excited or not in panic. So this is the time where trader would plan. Okay. So if there is no plan, planning could be when to add more position, when to reduce position, how much to reduce. This is planning. So one has to say, okay, if I have to manage this, then this is the level that I have to consider. Then that person would also consider, okay, if I have to reduce, how much to reduce. Right? So that plan must be there. And that plan has to be in place when the mind is calm, like current state, which there's no major movement price action. So best time to plan now. Plan must be there. That's the message. Okay. Because price action is in not in our hand. But when we know what is to look in, then it's become easy. Okay. So on one day, nothing different than what we saw. We see there's more data here where we see that this consolidation was broken and now it has reached to its peak. So on a bigger scale, we may say that this is a larger consolidation, yeah, like this, something like this, where you include this one. Let me draw a path pattern point of view. Okay, so you know that patterns are very local like this, and then pattern, it depends how much area you want to cover in the pattern, right? In last few minutes I talked about the pattern local to this one, which is rectangular pattern. If I zoom out like this, I see more data where I see this pattern which is complete, right? More like a wedge, not a perfect wedge, but it is a wedge where both these lines moving downwards in the same direction. That's the definition of, and the angle, and they come closer. So this downward wedge. So this is what we saw, a wedge kind of a structure. In fact, earlier also we had a wedge kind of a, you see, this was also wedge structure. And it's they're going to be little flavor. So sometimes it starts with horizontal rectangular, and sometimes it could make a wedge. Now, just to since we're talking about a little bit of DA, right? This rectangular pattern that I highlighted, it could also turn into wedge, annoyingly. Like for example, this is the rectangular pattern I talked about on 4 hours, right? You see this is the same highlighted area. So I'm going back to 4 hours to show that I'm highlighting the same area. You see this one, white. Now, this one, if the price goes down a little, hypothetically, okay, I'm not talking about probability. Let's say it goes down like this. Um, let's say I'll draw a path quickly. Not this kind, not this, like this one. So like this is how it has been moving. So it's more rectangular. But let's say this doesn't stop and goes up, but continues. In that case, if it does something like this, it then what happens is then it would create a wedge. I mean, I'm just simplifying, something like this. This is also very annoying, but this is possible. It's kind of, so we have to always remember. Uh, And best practices are known. Just to highlight that if support is broken and let's say risk is triggered, and let's say stop is also triggered because you have plan for that support, risk management plan is in place. But let's say something like this happens, a broken stopped out goes up. Remember, not financial advice, but the best practice. The trader has to think that, okay, now it has reclaimed, so I have to get back. Now, sometimes if this is more dramatic, it could go down further. Then one has to get out again because that again the stop is. So in that case, the stop could be the same place or stop could be at this place. In this worst case scenario, you get stopped out again. That's also possible. But how much is the loss? Not much in terms of percentage. So if it goes up again like this, so this could become again an entry point because now it is back in this particular zone, consolidation zone where it was earlier. So this is the planning part. So how many times one gets stopped out is not important. How much you lose when you stopped out is very important. So it is all about, and the planning starts from the buying and the entry, as I always say, not when you talk about risk. Risk is the last part. First, think about the risk is the, I mean, when you buy, how much position you take, because with respect to the support, how much risk you're taking, like that's all. But this kind of a tricky scenario, if that happens, one should be ready to do in and out because this is very normal. If people think that they'll get a perfect entry once they enter, they will never have to re-enter. That's dream entry. I mean, it happens, but not always, right? Because the good traders are not going to share all these things. I mean, these are best practices followed by any mature, experienced trader. And so there is a reference point. If the reference point is this support, so they would exit here, enter here, exit here, enter here, and you would think I'm an in and out, but that's okay. You are, you have discipline, you have plan, you have lost something because you entered here, but remember you are doing entry and exit nearby one reference point. So for an example, if one enters here and exiting here, it's not much of a loss. Even exiting here is not much of a loss like that. And re-entering. So what happens, of course, you have to pay transaction fees, some kind of slippage, and some kind of deviation for sure, but it's not huge. So number of in and out is not important. But when you do in and out, how much you lose, that matters. So in and out with respect to one particular level is not costly generally, right? Especially when high volume coin you take, it's not costly because it's not going to create any huge slippage in my opinion. Yeah, of course, if there is any very small cap, kind of a low, extremely low volume coin, you try to buy and it would and you yourself end up, spiking that price. It is very well possible in many exchanges. You would see that very low cap. You yourself, even small amount of money could actually create slippage. So that's about coin selection as well. So always try to deal with relatively, I mean, high volume. What high is very subjective. So I would say the volume should be higher than your own position size, right? Then it won't create slippage. It's easily visible, the wall, bid ask wall. You can look at it and see how it is, and you can figure it out. So try to choose coin which has usual position, like position is higher than your trading position, because then you will at least, you know avoid the high slippage. So these are some best practices where you look at volume to avoid slippage, right? So sometimes, people choose very low volume coin because they are so attractive, but if the position is high, then they I think they ruin their um entries and exit because they lose a lot in doing in and out. So that's very important. So multiple in and out is not a problem if it is with respect to the same level. And market sometimes is tricky, sometimes bad news happens, sometimes you see that FOMC meeting, and there's some volatility, crazy movement, and then you need support, protection, and the same time it is possible that it goes into one extreme, another then another extreme. We've seen so many times, especially during those FOMC events and meetings and news conference. So not to worry about it. You must have stop loss for sure, right? And then you must be ready to re-enter. Simple. Because when you re-enter nearby your exit, it's not a big deal, even if you have to do twice. So I hope that this kind of uh, best practices would help you. Right. So let's come back to TA stuff. See, whatever I said is not TA, by the way. Okay, it's about trading and trading's best practices. Of course, not advice because I'm talking about general scenario. But this is what is important. Some people think that the TA is like fortune telling. It's not about that. TA, it's all about risk management because you focus on key areas, key levels, key zones, and then plan. And then nobody's going to tell you what should be the position. Nobody's going to tell you how much to add, how much to reduce. Nobody's going to tell you. So it is important. But when you know best practices, what coin to be selected, right? What you should look into, like volume and all, those kind of aspects matter. And this is how, so TA plus best practices, and that's why I try to share as much as possible based on my experience. And then only the probability of benefits go up, not just TA and alone. So that's why our purpose of this feature is not just TA, but beyond TA, because TA alone is not enough. But sometimes what happens, the people focus on TA only, and then trade management, they follow something which is not working, emotion based, and that's why they lose. Simple. I'm not saying my practice is best. What I'm saying is it is proven practices. It worked for me. So if somebody's doing well with their own practices, then okay, that's perfectly fine. But if it is not, then always try out something different, because that's how you come to a strategy which works in most of the times. Not always, but most of the times. Okay, so that's the goal. Right. So coming back to the patterns, I was talking about TA stuff, right? So rectangular pattern could actually sometime, if the price drifts or drags below, then it becomes a wedge. And this is how the pattern changes, and one can track accordingly. So here it's a rectangular pattern, but it could change to something else. Okay. So this is one day where we had two consolidation zone, mainly this one and this one, and now this is in progress, and this is part of this upside move. Like this was tiny. You see, this is tiny, or maybe this one. So like this one, maybe this is something like this, and then there will be another leg up like this, something like this on the upside, and then complete the leg, and then again some kind of consolidation and decision. Each consolidation is a decision point, remember. Okay, and there would be some level in the future where that consolidation would end up into reversal. Okay, for an example, you see this one. If I go back, you see this one. So this is also consolidation, right? This consolidation, there were so many consolidation in between in this uptrend, like starting from In fact, this one consolidation, this one consolidation, this one also consolidation. This was, so each time the shape is going to be different. Remember, and this was larger consolidation, and then it was topping out, and then this pattern grown. This particular consolidation ended up with a major drawdown, and then a bounce, and then the whole entire zone becomes consolidation like this, and this is how the top is formed. Okay, and then the downtrend or counter trend to the uptrend started like this. Then again consolidation, 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 consolidation. So each consolidation ended up with a drop. You see, here the consolidation ended up with a leg on the upside. So this is how things move. Okay, this is how the price move. What I mean is, and now look at, then this is a leg up, consolidation, leg up, consolidation, leg up, tiny consolidation, maybe another leg up, consolidation, and one fine day, whenever again there is going to be major downturn. It could happen anytime. There are some signs, there are some techniques, and this is the goal that I have, that I would track this progress, and if there is any risk, then from trend point of view, then I would highlight. And this is how we try to navigate through. This is essentially, this is how the TA works. It's not about TA knows it's going to be 100K this time, or 200, or 1 million, whatever. It is not like that. We always focus on the present and the recent trend and see the health. If the health is not good, of showing weakness, then we highlight weakness. If the weakness turns into sickness, okay, then we highlight that. Because the sickness, or illness become the risk. That's how it is. So the warning sign becomes a heads up. Weakness sign becomes the heads up, and ultimately the illness becomes the risk at a trend level. That's why I started a new feature, M trend, where it's not about 15 coins, but it's about coin of individual selection. That's the whole idea. Because I had to pick some coins, but let's say somebody interested in some other coin. So what can I do? So I had to come up with a feature where I would highlight them, whether the trend is up or down. And if the trend is reversing, then I'll highlight that. So that's the whole idea about behind the M trend. No, in the M trend, there's no up interim update. There's just a black and white picture where the uptrend started or ended. Should be like that. Anyways, so this is about TA that I explained. Now, when it is here, we can think that this is a big pattern. Like when it was here, it is a big pattern, like that. And sometimes this is how, if you look at it, in fact, this, you can connect even all this, and you see how it forms a kind of a bigger pattern, and you will see it's not a parallel channel. Yes, it's not a parallel channel, but this is expanding, right? So this happens. So this kind of formation, this is more a bigger pattern, a biggest pattern within this one. So this is it's expanding in a way, like this. So this is also, this is one way to track as well. There are so many ways to track from a TA point of view. Okay, I don't want to overload you with a lot of things, but what I'm saying is TA tries to identify different patterns. Why the patterns are important? Because the patterns offer you the bounds, the boundaries. When you know the boundary, it is easy, because then you would find the key levels around that. When I provide the key level, the blue ones, those are the major ones. but in between there could be important one, like these are major zone where it reacted. This is a major support zone, like that. And this is not a major support. This is because if even if it goes down a little, it is not going to damage the trend. But this particular support is just for reference with respect to this pattern. So this support is pattern based support, right? It's not a critical support or a major support which would jeopardize the whole entire trend. Right? So one has to understand that. Okay, so I hope you got the idea. We can have a quick look at weekly and see how the weekly candle looks like. Weekly structure. Yeah, so it reacted here. Now it's we hide. So now you see for last 2 weeks it's flat, right? And it happens. It happened here as well. You see, it happened here as well. Very similar kind of a thing. We have to see how, if it going down, how deep it goes down. We'll have to see. The closing matters, remember. So at this moment, it's flat. When I say flat, means there is nothing to talk about with respect to prior update on a weekly. I mean, on a lower time frame, I talked about a lot, right? However, on a weekly, you what would you talk about? There's nothing to talk about because last week it was here, this week it is here. What to talk about? Because there's no change. Right? So sometimes there's nothing to talk about at a higher time frame because there's absolutely no change. If there's a big candle like this, then there's a lot to talk about, right? Or a big move like this, then there's a lot to talk about. If it is here for 3 weeks, there's nothing to talk about. Like this, last 2 weeks, there's nothing to talk about. And it happens sometimes like this, where it doesn't. So this is simply consolidation and positive consolidation because the range is so narrow. It's not hurting anyone, not at all. So this is how it is. So if we zoom out even further, okay, then what we see is the counter trend. Remember, right? Where we can see this is a big leg down attempt, another leg down, an attempt with a consolidation, and this is FTX, third leg down, which was smaller. But yeah, technically, this is past part of the history, whether this had to happen or not. Of course, this was a character which was not part of the drama and it was introduced. And so sometimes the trend is progress as per the algorithm, not based on the event. Okay, not necessarily. Um, because it's about profit booking and then it is cascading effect. And that's how the cycles are created. Not necessarily there is major event because price tends to go away from the average and then tries to come back to the average or sometimes goes below the average, certain average, long-term averages, moving averages. That's why the swing, different swing is created, different cycles are created. Okay. When there's a lot of enthusiasm, the price tends to move away from the long-term moving averages and then they comes back to the moving averages or goes below. So that's how you see that different trends are created. Essentially, that's what happens. So it's not going to be a linear path. So that you will see some kind of parabolic move sometimes, and then sudden drop and then resetting. That's what happens. All price always resets. It doesn't go up forever. Never. So that's why understanding of trend is important. Now, when I zoom out a little like this, so you see how the trend is progressing from Bitcoin, the big trend like this. This was the biggest bull run, longest time. This was the longest You see, this was the steepest. I don't consider this has importance because there were only few people. So it's more like a small cap alts. Because when Bitcoin was here, it was similar to small cap alt. I mean, we cannot ignore what happened. What I'm saying is the more and more participation, I think, came from this phase. So this was the most important one. And general public, got interested more when they saw 19K. When it was here, I remember, I was, from my side, I was somewhere here in 2015. Okay. Um, I bought at 400. So that's how my journey started. Okay. Um, January 2016 is when, around four, yeah, somewhere you see 400. This is where I was. But I was studying before that in 2015. So I was looking at Bitcoin and blockchain, not from trading and investing point of view, but technology point of view. So you can say I started looking into Bitcoin from here. So before that, there were very few people involved in this 2014. And so this kind of a move was more like only few hundred people or few thousand people, I would say. And, very few people. And this was a real deal in my point of view because the participation increased. And of course, then more and more people join. And remember that when more and more people join, the trend is going to be flattened. And you can see that if you have noticed. I have covered this in past. I'll cover again. Look at the look what is happening. The four cycles. This is the steepest one. First, then second, third, right, and the fourth. And if this continues, then fifth, that will become fifth. So this was the steepest neo-vertical. Then the slope is reduced. Then slope is near 45 degree. And this is little higher than 45, I would say 60 degree. This is more or less 45 degree from this bottom to this top, you see at angle. So what you see, and because of that, because the slope of this cycles is reducing, the peak that you see is also rounding like this. You see this rounding, the yellow arch that you see. And if the this so this is typical, it's not about Bitcoin. This is what happens. So when it's like the when the river starts from the origin, it has more force and more turbulence, is more violence and more speed. And when it progresses, like it goes down the hill, what happens? It becomes bigger and slower, right? And when near the sea, when it merges, it becomes silent. Okay, so point is, I mean, that's a just analogy to explain. So when the asset is new, it's about our age also, right? When so we grow the most when in first few years, and then the growth stops at 18, and then physical growth, and then there's some kind of flattening thing happens. Even everything like physical growth stops at 18, and you know and then mental growth also stagnates. And I mean, it has some limitation after some age. I mean, if you look at nature, this is how it is. So in the beginning, you see the speed and then slows down. I believe that more and more, and it's true with assets. Forget about analogy. It's true with an if you look at the forex market, there's a lot of trading, and that's why the percentage deviation is very little comparatively, unless there is a major economic event. More and more parties, when you see more and more buy and sell, the price tends to balance out. That's how it is. So there's lesser volatility, I mean, in that case. So that's what is. So here, if you look at BTC, BTC is slowing down. We are not going to see 100x or or 1000x, what we saw here with BTC. Okay. And this is how it is. I mean, this is how it works. So it is possible that, let's say, if this continues, this may, maybe the slowest. If this was 45-degree, maybe this goes at a 30-degree, 25-degree, like this, a long bull run, but very like slow moving bull run. It is possible, because then it would, let's say, go and flatten like this one at this angle, or maybe at this angle, who knows, and goes on for long like that, and this upper level becomes flattening, because this is not going to go ever for this is slowing down, as you could see. Yeah. So this could go like this, in my opinion. Up and down, up and down, up and down. We'll see. I mean, this is not a path. Remember, this is more like an average line. Like, for example, if you want to draw average line for this one, how would you draw? This is the average line, right? This is how it is. You connect the low and the high. That's you get roughly. So this is the angle, roughly speaking. So I would draw like this. So basically, lesser like this. I should draw from here, actually, from this one. This could be the path. So when, I don't know, this is 2016 or something. This is possible. So this good goes up, goes down, goes up, goes down, goes up, like that. Something like that. We'll see. Yeah, I can keep this one, actually. I can keep this one. So I hope this will help you understand. So I covered the trend and the pace of the trend, and how Bitcoin trend is slowing down, and that is normal. New asset might do differently. New asset, like you see, some new coin comes along, and that's how it is. What else should we talk about on Bitcoin? I think this is good enough. Yeah, this is not much to worry. Nothing. This is positive so far. Let's look at DXY quickly. DXY went. This is beautiful. I mean, this is good news that it was. Look at that. This drop, nice drop, especially on Friday. This was not. This is weekly chart, but this candle is weekly. But mainly, this drop is from yesterday. So we had to look at this one. I mean, last week what we said. Remember that we don't want this to close above orange, because that would not be positive. It tried couple of times. Look at that on a weekly. In fact, if you go on lower, you'll see more. Oh, I don't have that. Probably this orange line is visible for yeah. Did I connect? Probably I connected the closing. That's why. I think I connected closing price. No. Oh, I connected this one. Right. That's why. You can fine tune a little. My point is, there were a couple of attempts to break above this one. I connect this. There were a couple of attempts, but not really quite able to close above. So that's good news. So, but this has to break below, then real fun begins. So what we're seeing on DXY is the DXY trend is not broken. Remember, this is the first drop You know what? You can compare this drop with 66,000 Bitcoin here and 30,000 Bitcoin level here. Let me show you. This particular move is like 3,500 bull run of BTC. I mean, it's not our price. It's about waves, the comparison. Remember. So this starting here, ending here, coming down here. So what the consolidation that you see here is where the XY. Remember. So this kind of a drop is a big drop, like 50% drop maybe from Bitcoin, 55 roughly. So similarly, this was a bull run for the XY, and this drop is not actually end of the bull run. But you see what it's trying to do. This was an attempt, recovery attempt, failed. It went below, and that's why this sign line is very important. And then it shows you that it broke below. I mean, supported here, and then went up, but not quite high enough. Went down, broken this here, supported here, tried here, failed, and coming down with some attempts. I hope this is clear. So this is how it is trying to navigate through. Now you can put everything into one box and say this is the consolidation zone. So long story short, this is uptrend, this is counter trend, this is consolidation. So this has to go down for this to be killed. Okay. Otherwise, if it could stabilize here and attempt one more time and goes up, you never know. And I think this is all about Fed's policy. Okay. And of course, the data that we got yesterday's data, job data. So the lesser job opening, that means market thinks that lesser job opening means more pressure on the labor market. That means the Fed might not go with a rate hike and skip again. So this is how market interprets the data and behaves, right? Similarly, you see the yields are sticking, and not only sticking, it's rising. So this is almost near the breakout, this 10-year. What does it mean? Remember, I told you about this. We cannot ignore this. We can draw some lines and but look at this. So this looks crazy actually. So you see, this looks crazy. So what does it mean? That means the bond market yields are going up, means the bond market thinks that the Fed is going to raise interest rate, because this is directly related to interest rates, right? Fund rates. And they think that the rates are going to be longer. I mean, higher for longer time. That's why the 10 years is higher. In fact, the short term is even higher, because the short term has to be close to the Fed's rate, right? Central bank's rate. Anyways, that's bond market. Essentially, the bond market is telling that whatever rate hike that we have seen is not going to go down soon enough. It may last for a few years in the higher rates. So they may not raise it, but they bond market thinks that they may remain at higher level, like 4%, 5% range for a few years. I'm not speculating anything. I'm just interpreting the chart, because the chart is a reflection of someone's action, right? So for example, if you see someone's face, I'm not talking about actors, whether the person is happy or sad, you can feel, you can figure it out, right? Or let's say that's more about emotion, but let's say if you see a scar, right, that means what? That means the person has gone through some kind of trouble, whether accidental or purpose, some kind of trouble, because there is scar. That's a sign that something happened physically. So there's some kind of impact and there is some kind of residue, right? So when the market take action based on whatever hypothesis they would have. What you see is the effect on the price action. What we study, so when you look at somebody is injured, that means whether we don't care whether it is accidental or self, I mean, the person, whatever is the reason, basically. We think that person is, we try to say whether he's fully healthy or not. If you see someone, glowing face and body, healthy body, fit, and then we can say that the person must be very fit physically, appearance wise, so on. So the point is, looking at the chart price action, we can think about the health of the trend, so that this particular bond market or the traders or investors think that these rates are not going to go down soon, and that's why they are investing more into bonds, new bonds, which are at higher rates. Okay, so this is how, so the bond market is going up and the stock market is also going up, which usually, I mean, bond yields are going up and stock market is going up, which usually not the case, but there could be some phase where one group of people or investor think that the stock, basically stock and crypto group is one group, think that the Fed will pause, if not now, soon enough, and then they could continue. And of course, they look for certain data and decide. Why they do is their decision. We don't care. What they're doing is what we interpret. Who cares what, like, if few billionaire decide that or thinks that this they are going to pause, okay, because we are not going to ask or meet them and ask why. So we are going to see what they're doing, and because what they're doing, we are seeing impact in the price. And what we are doing is interpreting the price action, the net effect, because the price is the net effect of all the events, bad or good. So that's why we are in a better position, because we don't need to know what billionaires, millionaires are thinking. What we are seeing is the net effect, whether they're on the same page or not. We don't care. Anyway, so right now the group of stock and crypto, which is one group, and group of bond investors, they have difference in opinion, right? So this is the interesting phase, where the pendulum can swing at any side, but I don't think this can go long. Either the yields have to go down, or the stock market and crypto has to. I mean, they cannot just go like this forever. I mean, for longer term, in my opinion. Okay, so this is how it is. We'll see. We will see, and we'll try to decipher. Right, so this covers the bond yields. I believe this covers the macro things. Bitcoin dominance, we can have a quick look. It is sticking here, I think, but we can say it's the resistance is in effect. We can clearly see the orange line is in effect. Look at this one. Even today, it tried to recover, but not quite able to break above. So it is possible that it continues to go down further as altcoin improves, right? And we see the sign of it. So this is, and then in that case, this could go down. This particular chart is just for reference. In fact, the DXY is more important. Bond yields are important. They are also reference, but they are more important because they are related to macroeconomic. This one, Bitcoin dominance, we don't ignore it. Just this is also reference data, just to see how Bitcoin is doing with respect to rest of the coins, right? And we can also find resistance. Why not? Right? That's the beauty of TA, by the way. If you think about it, there are thousands of coins. The fundamental analysis cannot figure it out, but the TA can figure it out. That's a beauty. When the altcoins are likely to do well, you can figure it out from this one. Of course, not all alts, and that's why it's some of them. So, but the point is, we can say that the money, when the money will flow into altcoin, we can figure it out. So we can do TA on something like this kind of chart, which is not tradable. This is not tradable thing. And that's the beauty of TA, technical analysis. I love it. This is not being traded. This is like there's like thousands of coin information in this, but still it works, and that's the beauty. Anyways, so that's it. We'll end this session Bitcoin and we'll move on to next topic. Thanks everyone.